With me, I have the fund manager for JPM Europe Strategic Growth Fund, Ben Stapley. Congratulations, Ben, for being awarded Best European Fund.
Thank you, Christopher.
So let's kick off this interview, Ben, then with the first question. And if you look at the US and if you look at emerging markets, etc., they're often associated with tech companies. I know there are some tech companies in Europe, but most of the time we don't think about European companies as tech companies. And why do you think that is?
So it's an interesting question. I'm not going to sit here and say that the technology sector is the same size in Europe as it is in the US, but I think actually the real strength of Europe's technology sector is underappreciated. So if we think about how the market has changed since the end of the global financial crisis, it's really shifted very pro-growth, and technology's had a big role to play in that shift. So back at the end of 2007, the market, the Euro Stoxx 50, 40% of that was represented by financials and energy, and only 5% by technology. Fast forward to the end of 2021, the financials and energy weightings more than halved. The tech weighting has more than doubled. It's actually almost tripled in weighting. And within that, Europe has some amazing technology companies. Everybody is now aware of ASML, the big enabler of technology. So their technology is absolutely essential for many of the secular growth themes that we're all very aware of, such as automated driving, artificial intelligence, gaming. Demand is so strong for some of their machines, customers are willing to actually take delivery without proper testing. So there's some really strong growth names there in Europe. And in addition, I think if we think more laterally, and what can we compare to the technology space in the US? Well, luxury goods jumps out to me. So for me, luxury goods has been Europe's technology equivalent. So luxury goods in Europe have outperformed the NASDAQ 100 over the last 20 years, believe it or not. So I think there's some really interesting stories within Europe. And if you think more laterally, there's some really great technology companies.
And what would you say characterize good European companies? Is there something special that stands out in your point of view?
So what we look for a good European company is we look for both quality and sustainability. So for quality, we like our companies to have strong economics. So by that, we mean profitability in a nutshell. And so for that, you need good brands, good products, strong supply chains. All of this adds up to pricing power and to market share gains. And in addition, you need strong management to reinforce those high quality characteristics. On the sustainability side, we need to see good corporate governance. That's an absolute given in all of our companies. But you also need a social license to operate. So for that, society needs to see that you are using both environmental and social resources appropriately. And I think Europe is ahead of most regions globally on sustainability. And for example, we've traded carbon permits in Europe since 2005. So many of our companies are set up to deal with the rising costs of using the world's environmental resources. And having that quality and sustainability is crucial for providing duration of growth.
And if we look at the process in selecting companies for the fund, or finding interested companies, it might be that you don't make the investment straight away. But can you explain the process and how does that look?
Sure. So for us, our investment philosophy is, I think, slightly different to traditional growth strategy. So we would say that growth investing is quite tricky because the market has very high expectations for growth companies. So the market gets very easily overexcited if there's a good growth story. So to make alpha as a growth investor, you need to have a differentiated view on growth. And we're very focused on where expectations for growth are over the next 1 to 3 years, because we think that's a reasonable forecast window. So our philosophy is that high quality companies which are executing ahead of expectations will outperform. So it's an expectations-based growth philosophy, because we think the change in the rate of growth is more powerful than the actual level of growth itself. We call this sort of philosophy unanticipated growth. And the key piece of evidence we look for is positive forecast revisions. Now, our approach to how we execute the philosophy is also a little bit different. So we take a blend of quantitative and fundamental inputs, and we try and take the best of both approaches. So on the quantitative side, that really helps us with idea generation, and it helps bring new ideas to the table, and it keeps us disciplined and stops us falling in love with stocks. So it stops us getting overexcited about the latest growth story and keeps us very objective. The fundamental work that we do really helps us understand why growth fundamentals are changing. And it helps us to make more forward-looking judgments about the future rate of change and the future duration of growth. So if you take the example of a consumer staples company that appears to be growing sales very strongly, the quantitative side will alert you to this, but fundamental analysis will tell you whether it's growing faster or slower than the underlying market, and hence is it gaining or losing market share. If it's gaining market share, that's very powerful for duration of growth and for future profitability.
And if we take account the process you mentioned there, the characteristics, etc., are there any like trends or themes, if we look at the broad European market, that you find extra interesting? You mentioned luxury goods previously, but are there any trends and themes that you find just a bit extra interesting?
Sure, and I think it links back to one of the first questions you asked about technology in Europe, because I think in Europe there's a real chance to find hidden gems. And when we think about technology, that they're often not just in the traditional semiconductor or software space, they can be in adjacent sectors. So one really interesting area for us is within industrials, and particularly within industrial automation. So, I mean, let's take an example. When you think about electric vehicles, you tend to think about Tesla or Volkswagen. Not many people think about Sandvik, but Sandvik is the market leader in electric vehicles for mining. It's also a market leader in automation of mining fleets. So this theme to automate within industrials is a very powerful theme, and it's a quasi-technology theme, and Europe has some fantastic companies in that area. And it's another advantage that comes through in our investment approach. So because we put together the best of quantitative and fundamental approaches, we tend to have much greater breadth of ideas than a traditional growth strategy. And we believe that having breadth of ideas is a real advantage, because you can reduce stock-specific risk and avoid crowding in many of the sort of traditional or similar positions as our peers.
Okay, I see. Thank you. And if we look at Europe in 2022, what are the challenges and what are the opportunities from your point of view?
Sure. So, we've lived through a very interesting period. And as we come into 2022, we have a number of challenges as we move from a pandemic world to a post-pandemic world, which is still going to play a big role in company fundamentals, together with the easing or the change in central bank policy. So in terms of the outlook, I would see it both top down and bottom up. We have some different arguments we can make. So top down, we expect a very strong year in European earnings in 2022. and we expect stronger earnings to come through than we would see in the US. So consensus is currently looking for over 20% earnings growth this year. It's around 14% in the US. Secondly, top down, I'd point to some really big extremities on valuation. So Europe looks really attractive, especially versus the US. At the beginning of the year, it was the biggest valuation differential we've ever seen between the US and Europe. In fact, Europe as a whole was cheaper than the value segment of the US market, which I think is a very, very powerful statement about how attractive Europe is from a top-down perspective. In addition, Europe is nicely exposed to the trend of higher rates through its financials exposure, and it's also exposed through its export-led economy to the loosening of policy that's coming through in China, and should be very positively related to that. On the bottom up, as we move through the first quarter results, we'll need to make some forward-looking judgments about how companies are being impacted by the Omicron variant at the end of last year, how persistent inflation is set to be, and how supply chains are being managed. But the early evidence is that demand is still very strong, and we think any potential hit to margins could be temporary. So we would expect to see, hopefully, an upgrade cycle coming through on top of that already strong European growth.
Okay, excellent. Well, thanks a lot, Ben, for asking or for answering our questions, and a big congratulations again for JP Morgan Europe Strategic Growth Fund taking first place at the category of European funds. So thank you, Ben, and I wish you a very good day. Thank you.
Thank you very much.